Hey guys, so this video will show you how to use the trial balances extracted straight from your accounting software package to create a set of integrated financial statements in Excel which are tailored to your own presentational requirements. This will be particularly useful because in the vast majority of cases P&L balance sheets and cash flow statements generated by accounting software packages such as Sage or QuickBooks are not in an appropriate presentational format. So we've got our January TB over here. So in the first column A, we've got the nominal codes. In column B, we've got the account name. In column C and D, we've got the debit and credit balances. So what we need to do is get all our debit and credit balances into a single column with the credit balances having a negative value. So we'll insert a new column between the account name and the debit column, and we'll use an if function. So we'll do equals if. So equals if the value, if the value in the debit cell is equal to blank, then we want the function to give us the value in the credit cell times by -1. Otherwise, we want the function to give us the value in the debit cell, and we can just drag this formula down. And we need to do the same thing for our March and February TBs. So we can just copy this formula, go to our February TB, and then what we need to do is before we paste it, insert a new column, and then we can paste it in and then drag it down to the bottom, and then we'll do the same thing with our March TB. Just copy the formula and then insert a new column and then paste it in and drag it down to the bottom. So as you can see, all the accounts with credit balances have a negative sign in front, whereas all the accounts with which are debit balances they're all positive values. So with that done, we can now move on to our P&L. So going on to our P&L, so we've got in column B, we've got the different categories within our P&L. We've got monthly columns for each of our months, January to March, and we've got year-to-date column. And in column A, we've got the nominal code. So this will be the nominal code which is found within your trial balance. So for the sales category, we've got a nominal code of 4,000. So if we go to our January TB, we'll see that nominal code 4,000 is assigned to a sales account code. So if we go back to our P&L, we can now use Vlookup equals Vlookup. We'll be looking up the nominal code of 4,000, and we need to fix the column cell reference. And then within the table array, we go back to our January TB because we're looking at January figures. We then select the first 3 columns because that has all the information that we need, and we fix the cell reference fully. And then we need to specify the column index number, which is the column which contains the values which we want displayed on our P&L, and that's in column C. So column C is the 3rd column in this table. So we type in the number 3, and then we want there to be an exact match. So we type in 0 for an exact match, and then we enter. And then normally so we've got -1,200 for sales, but normally when you display your revenue figures in P&L, you want it to be positive, and you want your expenses to be negative. So basically, all credit balances you want to be shown as positive on your P&L, and all debit balances you want that to be shown as a negative on your P&L. So we'll times the Vlookup function by -1, and also at the front of the Vlookup function, we want to specify an if error function, because in some instances, if the nominal code here is not found within your TB because the TB has no balance for it, it'll give you an error, an error value, an error message will pop up within your cell, which will mess up your P&L. So we'll specify an if error function. So the entire Vlookup function will be in the value component, and then we put in a comma, and the value if error, we want in the instance where there is an error, we want a 0 number to be displayed, and then we enter. And now all we have to do is just copy that cell down into all of the into all of the grey cells, and then we do control and we select all of our cells, and then we do paste formulas. So what we need to do now is fill in all the subtotals. So net sales will be equal to our total sales, our cost of sales will be equal to the sum of all of the above, and cost of sales will be equal to your opening inventory plus purchases minus closing inventory. Cost of labor will be equal to the sum of all of the above, and gross profit will be equal to your net sales plus cost of sales plus the cost of labor. We sum all the expenses and the revenue together because all the expenses have got negative value and all the revenue figures have a positive value, so we can sum it together to give us the right gross profit, which in this case is a loss of 810. And then with our overheads we do something similar. We can just all equals to get the sum, and then what we can do now, if we enter that, we get our total overhead costs, and then net profit will be equal to our gross profit plus our overheads, and that gives us a net loss of 5,683. So now we move on to February. So for February, what we can do is, what we need to understand is that our February, so all the TBs after January, so our assumption is that our company's first month of operation is in January. So in all other months after January, in other words in February and in March's TB, the P&L nominal codes will have the year-to-date figure. So for instance, if we look at our February TB, we've got a sales balance of 3,200. This is basically the January and February sales figures combined together. However, in our P&L, we just want there to be only February's balances. So in order to extract February's balances out, we need to firstly just copy our formula, which we put into January's column. We just paste that, and that will give us the January figure. What we want to do next is we need to minus our January figure to remove that component from the year-to-date figures in February's TB. So we'll do minus the sum of, we then select our cell C3, and it's important that we fix the column cell reference. So we fix column C, and then we do sum C3 to C3 again, and we leave the second C3 as a flexible cell reference, a variable cell reference, and then we can enter that, and that gives us a value of 0. So what we need to do now, the reason why it's 0 is because it's still referring to our January TB. We need to change the Jan TB within our Vlookup formula to Feb TB because that's the name of our tab. So we change the JAN for Jan to FEB February. We then enter, and that gives us the correct sales figures for February, which is 2,000. So as you can see, the year-to-date figure is 3,200. So if we go to our Feb TB, so 2,000 plus 1,200 is 3,200. We go to our Feb TB, we should have a value of 3,200, which is the case. So what we do now is we just copy and paste this formula into our grey cells. So copy the formula and paste the formula in. Now we can just drag across the subtotals. So that gives us a net profit of 6,133 for February. So for March it'll be even easier. All we have to do now is just copy all of the cells in February and then paste it into March. And then what we do next is we need to change the Feb TB within our Vlookup function to March TB because that's the name of the tab. So we can just, again, we just select all of the cells in March, and then we do Control F and then go to replace, and we want to replace Feb, FEB, with March, MAR. So we've got that entered in already, so we can just do replace all. and as you can see, our net profit for March is 5553. So the total year to date, our net loss, is 5553. So our total year to date loss is 17,370. How do we check if it's correct? Well, if we go to our March TB, because our March P&L account codes will have the year to date balances from January to March, we just have to sum all the P&L account codes. So in column C, from 4,000, all of the account codes from 4,000 downwards to 8,000 will be our P&L account codes. So if we sum all of that together, we get a value of 17,370, and that matches our year-to-date figure on our P&L, so our P&L is correct. So that's the P&L done. Next we'll move on to our balance sheet. So you can see that our balance sheet is being divided into 3 months, January to March. In column B we've got the different categories within our balance sheet, and column A has the nominal codes for each category. So we'll use a Vlookup function like before. So we do Vlookup, lookup value will be the nominal code, we fix the column reference, and then the table array will be in our Jan TB because we're doing January right now. The table array will be the first 3 columns like before. We fix the cell reference for those 3 columns and the column index number because we want our balance sheet to return the values in column C. This is the 3rd column within the table, so we type in number 3, and again it's an exact match, so it'll be 0 for our range lookup, enter, and then in front of our Vlookup function we need to specify an if error function. So in the case where the nominal codes which we have on our balance sheet, if they are not present within the TB because they might have a nil balance, we don't want there to be an error message popping up within our balance sheet. So we use an if error function, and then the value if error we want to specify that as 0. And then we can enter that, and now we copy and paste this formula into all of the grey cells. So we just copy, we select all the grey cells, and then we can just copy and paste them in, the paste formulas. And next we have to move on to our retained earnings, which you can see is blank. So this needs to be linked to our P&L. So retained earnings will give us the accumulative year-to-date profit. So what we need to do is link it to our P&L. So we'll do equals, we go to our P&L, and then we find our net profit. And because we've made a loss, it'll be a debit balance. So we have to times this by -1 to give us the right sign on the balance sheet. So we have 5683 for our retained earnings. And then what I've also done here is I've inserted a new row here for wages liability, because the reason why is we have got 4 different nominal codes which relate to wage liability. That's our PAYE, National Insurance, Net Wages and Pension Fund. So in order to clean up the balance sheet, we want to be able to summarize all into a single row. So what we can do is we can do equals sum those 4 rows together, and that gives our wages liability figure. And then we can group these rows. So we go data and group, and now we can group those together, and then we just got a wages liability. And then similarly with our VAT liability, our VAT liability, normally in your nominal ledger you'll have a sales tax control account which tells you how much VAT you've charged on your sales to customers, and that portion has to be paid to the government. You've also got the purchase tax control account which relates to input VAT, the VAT on your purchases, on purchase invoices that you can reclaim from the government. So the VAT liability will be the amount of VAT which you owe to the government from your sales, and from that you'll deduct the amount of VAT which you can reclaim from purchases. So this VAT liability will be equal to the sales tax control balance plus the purchase tax control balance. That gives us 100,143. Now we can group those two rows together like we did before. We group, and then if we hide it, we will just have the VAT liability showing. And now we just have to enter in the subtotals. So our total non-current assets will be equal to the carrying amount for our non-current assets will be equal to the leasehold property, or we can just do equals sum, so alt equals. So that's the carrying amount of our non-current assets, and then for our current assets that will be equal to the sum of all of these. So we do alt equals again, we can just sum it, drag it up to get it all in, and then enter. That's our current assets. Total assets will be equal to your total non-current assets plus your total current assets. So that's the value of that's the total value of your assets. Your capital amount will be equal to the sum of your ordinary shares and retained earnings and the current liabilities. So let's ungroup these to give you a clearer picture. So the current liabilities will be equal to the sum of your payables, accruals, and loan plus your wages liability, which is basically the sum of all four of those. So we just select row 31, and then plus, similarly, we add the VAT liability row as well, which is equal to the sum of your sales tax and purchase tax balances, and then we can enter that. So that gives us the balance of our current liabilities, and then capital plus liability will be equal to your total capital amount plus your total liabilities, and that gives us 597,863. And as a check, so our total capital and liabilities needs to be equal to our total assets, which it does. So as a check, we can do equals capital liabilities balance plus the total asset balance, which would give us 0, and it does, which means our balance sheet balances. So next, for February, we just have to copy and paste the cells in January. So let's copy those and paste it. And then what we have to do next is our Vlookup function is referring to Jan's TB. So for February, we want to replace the Jan TB with Feb TB. So we just select all of the cells within the February column, Control F, replace, and then we replace Jan with Feb and replace all. Okay, and then the next thing we need to do is, if we go to our retained earnings, as I mentioned before, our retained earnings is the cumulative year-to-date profit. So in February, that will be equal to the previous month's retained earnings plus the profit in February. So if we go to a P&L tab, we can see in February our profit our loss is 6133. So we refer cell D32, which contains that figure, and then again we need to times it by -1 because a negative profit amount is a debit balance, so we times that by -1, and then we enter that in. And then if we go now to the bottom, we can see from our check that our balance sheet balance, so our capital and liabilities balance matches. So we've got 596237 for our capital and liabilities balance that matches our total asset balance. And next for March, we just need to copy everything within our February column, and this will be the same process for all other months from March onwards. So we just copy our balance in February, we then paste formulas, and then all we have to do next is, if we select our cells, we then do Control F, and then we want to replace our February, because in our March column, so VLOOKUP's referring to Feb TB, we need to replace that with March TB. So we replace Feb with March, replace all, and as you can see, our balance sheet now balances in March as well. Now we move on to our cash flow statement. So the starting point for our cash flow statement will be our net profit. So this will be found within our P&L tab. So we just link it to our net profit and loss in January, which is in this case a net loss of 5683. Because a net loss represents a decrease to our cash flow, hence we've got a negative value in our cash flow statement. And so next we need to remove those non-cash expenses or non-cash items which exist within our net profit. One of those is depreciation. Because depreciation is a non-cash item, we need to add it back to our cash flow. So we'll do equals, and depreciation will be found within our P&L. So the depreciation charge in January is 2,083. And because we're adding back these non-cash expenses, we need to times by -1 to give us a positive value. Accruals represent expenses that we've incurred but have not yet received invoices from suppliers for, and we've not yet paid. So these accrued expenses would have been deducted from our profit. However, as we've not paid them yet, we need to add it back to our cash flow. So that will be equal to, we go to our balance sheet because that's where the accruals are. We find the accruals, which is 340. Because it's an add back to our cash flow statement, we need to times it by -1. And with prepayments, the prepayments are the opposite. They represent expenses which we have not yet incurred but have already paid for in advance. So these expenses would not have been accounted for or deducted from our profit figure. So we need to deduct these expenses that we've prepaid. So prepayments will be found within our balance sheet as well. So we go to our prepayments cell. In this case, we've got 0. We times it by -1 to give us the right sign on our cash flow statement. Next is inventory. So inventory here represents the closing inventory at the end of each month. So because closing inventories again would not have been deducted from our profit figure, we need to, but we've already paid for these inventories. It represents a cash outflow, so we need to deduct the closing inventory value from our cash flow statement. So we go to our balance sheet and then we find inventory and then we times by -1 to get the right sign in our cash flow statement. And with payables, the payables basically represents expenses which we've incurred and have received invoices from suppliers for, but we've not yet paid. So these payables would have been deducted from our profit as an expense, but as we've not paid them yet, we need to add back, add back to our cash flow statement the payables amount. So we go to our balance sheet and then we find the payables cell and we times by -1, and then this represents an add back to our cash flow statement. And then with our wages liability payable, it's similar to the payables. So we just go to our balance sheet, we find our wage liability amount, which is here, 1,050, which is the sum of PAYE, national insurance, net wages, and pension fund. And times by -1 again. And then next is receivables, which represents sales that we've made to customers, but we've not received any cash from. So we need to deduct this amount from our cash flow statement. So we go to our balance sheet and then we find our receivables and then we again times it by -1, and then VAT receivable payable with that. So this basically represents the amount of VAT which we either have to pay to the government or receive from the government. That's found within our balance sheet. If we go to our balance sheet, we can see in our case we've got VAT liability, we've got a debit balance for our VAT liability, which implies we are owed money from the government. As this is a receivable amount, we treat it in the same way as a receivable, so it represents a decrease to our cash flow. So we select that, we times it by -1 to give us the right sign. So one thing to take note is that January is our first month of operations, it's our first month of trading. So when we calculate the cash flow impact, we're using the full amount that sits within the balance sheet in January for each of the balance sheet line items. However, going forwards, when we do the subsequent months, such as February, March, etc., we'll be looking at the movements in each of the balance sheet items balance between each month, as that is what will determine the impact on the cash flow. So the cash flow from operating activities in January will be equal to the sum of all of the above. Next, we move on to our cash flow from investing activities. So in our case, all we've got is fixed asset purchases. So in January, we're going to just simplify our assumptions. We're going to assume there's no reevaluations of any assets. So if we go to our balance sheet, we can see that the total value of our leasehold property, because January is our first month of trading, we've got 500,000 of leasehold property purchases. This implies that we've paid 500,000 in cash, in bank transfers for the purchase of that property. So because that represents a cash outflow, we times by -1. And then there's been no sale of fixed assets and no dividend received, so the cash flow from investing activities will be the sum of the above. And then with cash flow from financing activities, again, we're going to be doing some simplifying assumptions. So in our case, if we go to our balance sheet, so we do equals, and we go to our balance sheet, we'll see ordinary shares in our first month of trading in January is 200,000. So these represent the amount of capital or funds that we've raised from issues of shares. So this represents a cash inflow, so we times by -1 to give us a positive value. We're going to assume that there's been no shares redeemed or bought back. Loans received, so again, we're just going to assume that whatever's on our balance sheet will represent the amount of loan that we've received. So if we do equals and we go to our balance sheet, we'll see that the total loan amount that we received in January is 500,000 because it's a cash inflow. We'll times by -1, and we're going to assume that this loan here is an interest-only loan, so there'll be no principal repayments each month. This just simplifies our model. So there'll only be interest expenses on it. And then with loan repaid, we're going to assume there's been no loan repaid, and also no dividends have been paid to shareholders. And we'll do alt equals and then enter to give us the sum of the above. That's 700,000. So these represents cash inflows from financing activities, and this basically funds our cash flow from investing activities and also funds our loss from operating activities. So the net cash flow will be equal to the cash flow from operating activities plus the cash flow from investing activities plus the cash flow from financing activities, and that gives us the net cash flow of 97667. The opening cash balance, well, because January is our first month of operations, we're going to assume that the opening cash balance at the beginning of the month is 0, and then the closing cash balance will be equal to our opening cash balance plus the net cash flows for the month of January, which gives us a closing balance of 97667. This needs to tie back exactly to our balance sheet, so we'll do a check. So we'll do equals the closing cash balance minus the balance sheet cash balance should be equal to 0. So we've got 97667, which matches exactly, so we get a variance of 0. So next we move on to our February column. So the first two line items relate to P&L line items, so we can just copy and paste across the formula from January into February. So for net profit, we had a net loss of 6,133 in February, and a depreciation charge in February was 2,083, which is an add back to our cash flow. And then for the remaining line items, they all come from our balance sheet. So for that, we need to work out the change in the balance between February and January, as that will then determine the impact on our cash flow. So first we need to get the February balances. So what we can do is if we drag across the formulas in January and paste it into our February column, we get the balances for February. So in the case of accruals, we've got 780 as our balance in February. And now we need to deduct from our February balance the January balance to get the movement, to get the change, because that value will then give us the impact on our cash flow. So what we can do to get the January figures, we can go into our January cell, copy the formula within that without including the equal sign, so we can just copy that, and then we'll go back into our February cell, and then we'll do minus, and then we'll paste in that formula that we copied from the January cell, and if we click enter, that gives us the impact on our cash flow for February. And then we'll do the same thing for all the remaining line items. So for prepayments, we go into our January cell, we copy that formula, and then we can do minus and then paste it in our February cell, and then we'll do the same thing for inventory as well. So copy the January formula and then do minus and then paste the January formula into a February cell, and then we'll do the same thing for payables. So copy go back to February, minus, paste that in, wages liability, copy, go back to Feb, minus, paste that in, receivables, copy, and then go back to February, minus, paste that in, and then VAT receivable, copy, go back to Feb again, and minus, we'll paste that in. And then now we can drag across the subtotal for cash flow from operating activities to give us February figures. And next we move on to a cash flow from investing activities, and we do exactly the same thing, just drag the January formulas across, and then we go back into January, we copy the formula, and then we go back to February and minus and paste in the formula, and then cash flow from investing activities for the subtotal we can just drag across the formula from January, and then same thing for cash flow from financing activities, drag the January formulas across and go back to your January cell, we copy the January balance, and then go back to February, minus, and then paste, and then same thing for loan received, copy, and then minus and paste, and now we can just drag across the subtotal from January. And next for our net cash flow, that will be equal to our cash flow from operating activities plus our cash flow from investing activities plus the cash flow from financing activities. There's our net cash flow for February. Our opening cash balance in February will be equal to our previous month closing cash balance, and then our closing cash balance for February will be equal to our opening cash balance plus the net cash flow for February, and that gives us 95583, and this needs to tie back to our balance sheet exactly. So if we drag across the check formula, we get a difference of 0. So just to double check, we've got closing cash balance of 95,583 in February. If we go back to our balance sheet for February, as you can see, we've got a closing cash balance of 95,583 in February. So with February's cash flow statement done, the remaining months from March onwards will be so much easier. We just have to select the entire column for February, and then we drag it across, and as you can see, our formulas update automatically, and we've got a check balance, a variance of 0, so we've got a closing cash balance of 93,500. So if we go to our balance sheet, the closing balance in March should be 93,500, and it is.